Hello, everyone. This is episode 36 of the New Barbarians podcast. Today is Monday, September 22nd, 2025. The podcast will hit the platforms later tonight. Today, we're joined by Wyatt O'Rourke, founder of Basilic, author of The Bitcoinization of Finance, and chief marketing officer at The Space. Say hello, Wyatt.
Hey, everyone. Thanks for having me, gentlemen. Very excited.
As usual, I'll just give a brief intro and then Mark will talk about the markets and then we'll get into the interview with Wyatt. So the FOMC did cut rates by 25 bips last week, as everyone expected. I guess that there is one note: the newcomer Stephen Myron, hopefully I'm pronouncing that correctly, is dissenting because he preferred a 50 basis point cut. And the
in for a dime, in for a dollar bill, right? I mean, let's just get to
why wait? Because everyone also expects another 50 basis points in 2025 in the two remaining meetings. We are in risk on territory from that perspective with monetary easing with interest rates. As I think we often talk about, this is inevitable given the situation that the U.S. economy is in. And over the last now 17 years, we have noticed the government willing to do what it takes to make sure the economy stays afloat and people have jobs. And while that's good for having jobs, it's not so good for inflation. And I'm sure Mark will have more to say about that. So given what I just said, we're in risk on territory again. Volatility rallied 5% last week. That's 2 standard deviations, but it's kind of funny when this is all expected and people do what they're supposed to do, so that the market went back up even more. Short interest also rallied because basically there was a squeeze on anyone with shorts in a market that's just going to go up. And then liquidity also rallied on the back of the market's rise. On the flip side,
was that short squeeze a washout, or was that, you think, an interruption of those donuts and the and I know that Open Doors up 100% this month. So that stuff that you've talked about a couple of weeks ago, is that over, or is that just paused?
It's a great question. I don't think we've observed the same short squeeze phenomena that we observed earlier this year. So I think when single names like Open Door are up and basically benefiting from more of this squeeze, I think it is more idiosyncratic to the handful of names. And then it does look a lot more like the previous big one with GameStop and stuff like that, rather than the pervasive one where all short interest stocks kind of rallied, and that was a rough outcome for the quants that all bet on these things. So I don't believe, at least today, that it's the same kind of coordinated short squeeze of buying what I like to affectionately call crappy stocks.
Mm-hmm.
And then on the other side, defensive factors like ROE, earnings yield, and size all went down materially. Just guessing 2 to 3% is close to statistically significant, like 2 standard deviations. But this is exactly what I would expect to happen when the Fed announces what everyone knew they were going to announce last week.
Yep. Yeah, because it got a little priced in. So a pause, markets reassess. Makes sense. Shall we take it off?
Yeah, go for it.
All right. This week I started with Chrome, which is very good because only then can I show my screen. I am a Brave browser guy, Wyatt. So for those who don't know, that's kind of in the Bitcoin digital asset realm of browsers from a safety standpoint, etc. Let's just start at markets. This is our scorecard. What it is it's several $100 trillion worth of assets. So we think it's a good start to get the high level approach to metals, equities, bonds, commodities. Gold leading us again month to date like it did last week. Silver, something, the little cousin that's getting a little bit more attention these days, is actually up more than gold this year. It punched above it, I think $42.50. I believe it's up 44%. And just taking a step back, the gold silver, there was a ratio over time. It used to be 20 times more silver per ounce of gold in the coinage act. I think it came out like that. Wyatt, I know you're well read, well written in the space, but I think it was 20 ounces of, was it 1 ounce of silver and 1/20th ounce of gold for the dollar back in the coinage act of 1790, something like that. So there's always been a relationship, but I don't know why, if you recollect, if that's the right ratios.
Not sure.
You're not sure, okay. And that was what we called bimetal. And the reason I bring it up is not to show people that I read some arcane thing this weekend instead of watching the Giants lose again. I did not. I just brought it up because, just like before you got on, Bill's like, oh, Mark, the factors you're going to talk about, are those long short or long only? We always look at things first as what they are and who they are, and then in relation. Silver and gold have been related forever. And right now, the relationship is being stretched. The relationship usually goes to, say, between 30 to 1 to 100 to 1 is the price relationship between the two since the break in 1971. That's like 95% of the relationship can be explained within that. So if it was 100 to 1, then it would be silver at $42, call it, and then gold should be at 4,200. We're not quite there. We're about 85 to 1. So we're approaching tremendous gold outperformance. The reason that's important is because it indicates we're not in a blow-off, frenzied gold and silver market. Because if we were, the relationship would be where it was in 2011, where it was closer to 30 to 1. And silver was $30 or $50, and gold was like $1,500 or the like. So that's all. It's an indication that, yes, we're looking at gold run, but silver has not caught up yet, and that's why we still think there's legs to this rally in the upshot. That's the money shot, as they say. And we still have dollar and crude lagging. That's by design for this administration. They want dollar down, they want oil down, so they can grow, baby, grow without hitting up inflation too much on the oil front. But what gets headlines is more about stocks. So look, month to date, Bill, you talk about short covering. Well, left for dead was Tesla earlier this year. It was down like 5-10% on a year-to-date basis, maybe a little more. Now it's up 32% this month, punching it into positive territory in the year. That's the we call it magenta. There might be another cool name for that color that we assigned Tesla. But we gave the parquet coloring to the group Mag 7 in the middle there, up 10% on the month, basically bringing it to a 20% year-to-date move. Big reversal led by Google and Tesla. Elon being granted Poobah status again by the board unanimously. And he's going to put $1 billion into the stock. Why not? So again, the momentum reasserting the stuff that got you paid year to date is happening again month to date. What does that mean? It means that although we had a pause with the Fed announcement, we think that momentum, I think that large cap tech is probably what's going to bring you home on the year, all else being the same. The only thing I'm going to buzz through this and just talk about rates for a second and about the inevitable easing that's coming. So for anyone who's not really familiar with interest rates, there's an old saw that the Fed controls the overnight with less impact going out to the 2-year point right here. So the Fed can tell you what you're going to get paid overnight because they own the banks. And then the market controls, say, 2 years and out. So a year ago, which is in the dark solid line, we had a 5.5% overnight rate. The 10-year, say, was at 3.7%, inverted yield curve. The Fed cut rates, as we know now, down to 4.25, not shown here, but the overnight rate, 4.25. That's a big move, 125 basis points. So the Fed controls that. But what did the market do? The market said, yeah, how about we increase the long end because we think inflation's coming. Rates didn't stay the same in the long end. They went up. People call it a buyer's strike, a revolt back last September. Well, after the Fed lowered rates, rates went up again over the week. So not as dramatically, but we do have inflation set in, and that's why we think that margins and earnings, Bill, to go into your area of expertise in AI, will continue to see companies adopt AI strategies or rip margins out. Because Walmart, that famous exchange that the CEO had to Trump was, hey, tariffs may look good to you, but they're not going to be good for the million people that we employ. So tread lightly. And you're going to see it. Walmart already does weird stuff like full-time employees, like 30 hours a week to try to get around, paying out human beings and try to use more technology. So the last thing I want to leave people with is on the direction of travel, the canary in the economic sovereign coal mine is Japan with 250% debt to GDP, birth rates that are, I don't know if they're zero, but the Hello Kitty culture is more about, being alone, staying young, infantilism with the younger group. This is not an indictment. It's just reflecting what's been stated by many before me. And what are they doing? They're raising rates. They're raising the overnight rate because they are scared of inflation, because think of 250% debt to GDP. It is multiplying the impact of any basis point that they have to pay out and then can't pay to the aging economy, the aging populace there. So not only are rates rising in the 2-year, 10-year, and 30-year, but they're rising in the overnight rate. So we see the U.S. wanting to push rates lower, as Bill said. Moran, excuse me, you had it right. The recent appointee lowering rates just to make things easy to help, grow, baby, grow, which is the mantra of the current administration. There's a cost there. They are treading a tough line, threading a very difficult needle in trying to lower rates, manage inflation, and have a lower deficit while increasing jobs. Good luck. So with that, I'm going to push it over on the job front. Bill, take it back, please, and introduce Wyatt to our audience, because not only is he talking about the Bitcoinization of finance, but he's talking about how folks can get jobs and where they can get them.
Cool. So, Wyatt, I gave a very brief introduction, but I think to start off, can you just tell our viewers a little bit about where you are now, how you got there, where you went to school, whatever you feel like telling us?
Yeah, absolutely. And thank you again, gentlemen, for having me. I'm super stoked to be here. A fairly normal, Bitcoin story, I would say. I got a Keynesian finance degree from Drake University. Not too proud of that. No. We had to relearn, a lot. But I've worked in various fields of finance and real estate, asset management, IB, PE, but really just kind of identified more as an entrepreneur. I had a startup previously that went bust, and so in 2023 I was trying to start a new company because I didn't want to go back and work for the man. Once you get a taste of that, it's hard to let go. But at that point, I was a Bitcoin maximalist. I was very involved in the Denver Bitcoin community. Founding member of the space, which I'm sure we'll get to. But my peer group and my friends were also Bitcoin maximalists. So I was trying to think of what kind of business I could start where I could apply my skills and experience. I can't code or anything, so I was like, shoot, how do I do this? And after just talking with friends and mentors, I decided to adopt the RIA business model. So I founded Basilic Financial. We're an independent state registered RIA in Colorado, and from the beginning, the firm was focused on being a Bitcoin focused, wealth management firm. And, our slogan is prosperity with purpose. And obviously Bitcoin plays a huge role in that, but we really just try to bridge the gap between TradFi and Bitcoin. And I believe it's my fiduciary duty to talk, about Bitcoin and get my clients to, embrace and understand Bitcoin. And it's a ton of fun, waking up every day and doing something you love.
Wyatt, you talked about not being proud about the Keynesian studies at Drake. So why didn't you like Drake?
Well,
I'm just kidding.
I am.
It was the other thing
Yeah.
you might not have liked. And I bring it up because talk to the folks here about why the Keynesian approach is not something that you herald in your work here at Basilic.
Yeah, it's just fake. It's not built on anything real or foundational. And I think I'm kind of disappointed where I didn't even get like an Austrian point of view in school. And I was young and naive, and I just thought this was the way of the world. And even if you look back at the history of Keynesian economics, I think it's riddled with perverse incentives and unsound, or I would say unsightly, like moral worldviews that I just don't align with. And I think higher education at large is just woke re-education camps, and I was certainly exposed to a lot of that in school, and unfortunately fell victim to some of it, which was another thing I had to relearn or rewire my brain, like post college and in the real world. So I just don't think, at least not having a diverse point of views in a higher ed environment is obviously not great, but it just, I don't think, set us up for a lot of success. If we were just going into the corporate mill of being an email monkey and doing what's been done previously, it's like, sure, I guess there's some credence to that. But as soon as you learn about Bitcoin, as you guys are astute to, it's like, well, you just know like business can't be done that way for the long term. And so unfortunate, just spend a lot of money on something that I don't use.
Good. So yeah, and I agree, or I appreciate all that you're saying, and the way I rationalize, because I like to rationalize things that are difficult to digest in my world, is to say it might have served a purpose, or it was a necessary. The Keynesian approach about government steps in and helps the safety net and reduce the failure of market systems sounds awesome, and people in the Depression would agree that the Workers Act helped and all that. But the problem, I guess, and why, without putting words in your mouth, but that to take what you said and to apply it to today, is that now I think once you get your hand on the tiller of the Treasury, you say, hey, why do we even have to have a recession? Let's just keep jobs going. Let's fund healthcare. Let's keep everyone employed as often as we can, because recessions are very difficult. And we've had virtually no recession since '08, a brief one that hit the service industry hard and a few in COVID. But the problem is, if you outlaw recessions, you stop the allocation of efficient capital, and then someone pays it, and it's in inflation or captured markets. And that's not just tin hat stuff. It's relevant to what we're talking about, because you're like, where do I get the jobs? And companies that aren't efficient are going to try to get more technology. They're going to push you out. And so we're here to turn the frown upside down, as I like to say, by saying, if you aren't finding a job because companies aren't able to get on the right side of profitability, I'd love to hear more about your space. So you went to college, you did a few things, you want to be independent. That's your day job. What are you doing at this space? What is it? I saw it, so I have my own opinion on it. I'd love to hear about how that dovetails with your work.
Yeah, absolutely. I think it's the coolest project I'll ever work on in my career. The space is a community run Bitcoin Citadel, so it's like a in real life place where Bitcoiners specifically go to meet up. And I think you can kind of think of it simply as co-working meets social club meets event space meets like professional trade organization. And so in Denver, we kind of jokes like we have a very high like cypherpunk to NPC ratio. There's a long history here of different aerospace, kind of advanced government jobs, a lot of military industry, a lot of tech industry. I'm sympathetic to a little bit more sympathetic to the early days of crypto, but a lot of cryptocurrencies that I don't like or support have been started on the front range. And so it just really obviously out west, there's still like some reminiscences of the pioneer spirit and manifest destiny. So it's an interesting group of folks out here that I really enjoy. We had a very strong BitDevs meetup. We have also very strong libertarian meetup, and so there was just kind of like this hunger for Bitcoin focused hub, and these are kind of an emerging thing. Bitcoin Park, I would say, is kind of setting the tone. They have locations in Nashville and Austin. They kind of pioneered this concept. There's also a new one called Presidio in San Francisco. So we thought why not us? And I think there's kind of a few macro trends that we're kind of capitalizing on. I think specifically for younger people, I have to, I don't know like the average age of our member, but probably trends to like mid-30s. And so younger people, I would say, they've really seen like an erosion of community in their lifetime. And while I think the internet is great, I consider myself a child of the internet. Bitcoin, obviously, internet native protocol. We can't gloss over how important real life interactions are, and at least for me, I don't think there's anything more fulfilling or energizing than getting together with a bunch of Bitcoiners in person and just rattling off ideas, challenging each other, debating. And we wanted to get that started, and within the ethos of Bitcoin is how we try to run our operation. And the space is a grassroots movement. We formally started in April of 2024, and we always joke that we were selling vaporware, so we kind of had a founding night, and started donating to our cause, and we had to build up a Bitcoin treasury, and then ultimately moved into a building and kept building out the organization. And it's just very fruitful. Community building is a big investment. You have to actually take the time to know people and assess people and make sure you have a shared moral worldview and values, and you're aligned on building for the future. So I think kind of community building is one kind of macro trend we're really focused on. And then I would say the second is kind of opting out. I'm a big fan of Balaji Srinivasan and like his network state ideology, and that's kind of simply like cloud power to land power, and you probably have more in common with the folks you've met on the internet than like your next door neighbor. So it's like, how do you get people that are aligned to create action, or call each other to action in the real world? And he had this podcast episode where he was asked like, well, how do you take back San Francisco? And he's like, block by block. And so we've planted our orange flag. We have and not quite a block yet, but a physical building and a hub, a true community space. Members chip in where they fit in. Where it's like, okay, there's so much madness or whatever that we may not agree with, and I don't claim to speak for the members as a whole, but it's like, how do we opt out of our kind of existing cultural and societal norms and create something that we think can be around for the long term, and really kind of help usher in a sound money future, which is kind of our driving narrative.
Yeah, it's Bill. If can you imagine when you started, if you went to a place like there's that had some people from Citadel, some people from Millennium, and they're all in pods. Like, hey, we're having an event tonight about getting alpha in the markets. Have some of your friends come. I'll have some of my clients come, and they go to the same place. Like it seems like you can't walk. You can't even talk to people from other hedge fund firms without having a lockup or an NDA.
Yeah, so it's kind of funny. We just heard quite a bit about the libertarian sort of community that is embracing Bitcoin, and I'm kind of careful with I believe that it's a very free community, and from like especially a libertarian perspective, but from a pure capitalist perspective, like that would never happen in my industry. Like we kept things very secret and continue to, from a huge standpoint with intellectual property, and like quant finance was very valuable 20 years ago. And so yeah, we wouldn't really talk about what we were doing with our competitors because they might try and do it themselves. I mean, it's pretty basic. But yeah, even my community that used to require like NDAs and like legal protections just to talk is opening up quite a bit, because I think there are huge advantages. And all you have to do is look at like the open source community with software. Like that, that's what Python is. And now Python is like this thing that a lot of people use, and it's clearly the best tool for like quant research and statistics. And I think it's expanded way beyond where it kind of started, with Pandas and Python being, an engineer at AQR who needed to solve a problem and created this tool. And I realized Python itself, like, I don't want to offend any of those open source people. Like, Python itself was created in, I think, the 90s. And I should know the names of these people, but, Pandas in particular, I think, took it to the next level. And that it's an open source community. And I think that this may actually be the reason why Bitcoin has been so persistent and has grown so much. There are, cult-like followers, not to describe any of the Bitcoin maximalists as cult members, except for maybe Mark, who does behave like he's been brainwashed at times by like
in a jingoistic, dedicated manner.
But I do think that that there is a reason why this community has persisted so long, and it's because people do care about the community. They recognize the benefits of growing the community, and what you're up to is just a perfect example of that. And it's a just an interesting observation between like the capitalism of staying all by yourself and not even really talking internally in a lot of cases, to what I think is a very capitalist outcome from what is a communal arrangement. And I'm careful to say communal rather than like communist, which is another way to think about people sharing space when they're like direct competitors, and meeting up and recognizing that there's a mutual benefit to collaborating.
Communal, yeah, but not with that ideology of the commies. And I think it is back to my favorite statement that we talked about, which is, when the opportunity is so big, the risk is not amplifying your work. The risk isn't sharing what's out there, because Bitcoin is only 20% of all global assets. So the risk is you're not going to get big enough to take advantage of that huge freaking, it's like the seas are not overfished yet. But in traditional finance, you're bumping into each other trying to rip out a declining pool of alpha. And for us in Bitcoin, it's like your job is your risk is that you won't be resourced when the waves or the openings occur for you to monetize and bridge into a TradFi space like credit or something else. So I think it is an opportunistic necessity. And I don't know the analog for it. I'm sure in nature there is. But in your area, Bill, or in traditional finance in the alpha seeking hedge fund area, I would think it is where they do things like ETLs went from alpha to commoditization, where you're constantly pushing down things that are no longer differentiated to do your higher better. And for us in Bitcoin, I think it's basically bridging the gap. How quickly can I bridge the gap? And if someone gets in and we both see the same, go across the bridge together, the opportunity is so freaking big. I don't care, because my risk is that I don't create the bridge. That's my risk. It's not how many people cross it, because of the high concentration, low concentration imbalance is like none I've ever seen before. I just have to make sure that I'm on that bridge and I'm resourced to take in the waves of opportunity that come in. And I think that's what the Communist Manifesto is for all of us here in the Bitcoin space.
Well, and yeah, I think it is, back to my open source example, like even very large quant hedge funds like former employers of mine certainly started to embrace that, but they didn't at first, and then they recognized like all of our engineers are using this when they go home. Why don't we use it in the workplace? And, it takes a while for some people to recognize the benefits. Yeah, like in your analogy, if you're going to refuse to cross the bridge or something, you're going to be left behind, like I was, because I didn't invest in Bitcoin until 2023, 2024. And, I'll just continue to, like you say, you're not proud of your Keynesian upbringing. I'm still proud of my quant risk manager training, but I did miss a little bit of a nuance there. I just was kind of trained to think of all volatility as risk, but upside volatility is great. And that's why, I am a believer in crypto and Bitcoin. And it seems like it would only be appropriate with this guest to ask about other coins and your thoughts on, let's leave the fart coins and the meme coins aside, but what about the, like,
Well, when you do
Ethereum
that,
and
Bill, then there's nothing left but Bitcoin, I think Wyatt would say.
let him speak for himself.
I think they're all scams. I don't think we should give them any credit or credence or airtime. I think they're actually probably rather nefarious. And I just think it's very high level. Like the most charitable I could be is that there may be a technological use case. The problem I have is the way they market themselves. And so it's like, okay, as soon as you introduce a token to your technology product, you've introduced an economic system. And most of them just aren't very well thought out, at least not as well thought out as Bitcoin. And then on top of that, they're all pre-mined. So, like the creators of the project, keep a large portion for themselves, dump like the rest on retail. I think 2022, when we kind of had the bear market, in crypto, Corey Clipstein, the founder of Swan, did an amazing episode on Preston Pitch's podcast. And he's just talking about, kind of the VC playbook that, dumped a lot of, money into these, crypto projects so they could get, shares in these more liquid than, their traditional investments. And, they weren't really providing the venture capital firms, big venture capital firms weren't providing, playbook for, the founders to necessarily be more productive with their startup. They were just all about, marketing the quote unquote, technology. So, they could pump their bags and, again, dump on retail. And so I just think that is gross. And, on top of that, they all claim to be decentralized, and, Solana literally has a CEO. That's not decentralized in the slightest. And I think it's, again, gross that they have the audacity to claim that they are, decentralized. And so, when you have something like Bitcoin in the cryptocurrency space, like it is the gold standard, and all these other, quote unquote, cryptocurrencies are less decentralized and they have less well-designed incentives. And so even investing in either of those, you're automatically kind of like, investing in a loser to Bitcoin. And so I just don't participate, in those markets at all.
Wyatt,
Stablecoins.
and I need to hold on to stablecoins for a second. I share a lot of your aversion and concerns about all the other assets, and I come at it from your same thing about the trilemma. The three legs of a sound blockchain is to be decentralized first and foremost, to be secure, and to scale, to have a business purpose and a utility that would draw capital and provide service. So those three things, and you have to have. If you scale all day long and you're not secure or decentralized, people are people. So your point about an economic structure, once you introduce a coin, I haven't heard this before, and that's why I want to touch on it. I think it's really worth putting as a pillar for anyone looking at these. If you are in a digital asset and there's a coin involved, the assertion you made is once you introduce a coin, you have an economic structure. And then your assertion, I believe, and I would agree with it, is that economic structure of any other digital asset, let's put stablecoins aside, Ethereum, Solana, etc., is inferior to Bitcoin, first of all, and is flawed at the start for reasons we talk about decentralized. And the other one is incentives. The way that these were made, the incentive structures are either not transparent or they are skewed to the initiators, the ICO creators, the VCs. Those are both defensible and supportable claims, I'll say to the least. And anyone looking at them, that's a great place to start. It's why I think Bitcoin still 60% or so of the whole digital asset universe has been since inception or higher, because of those better traits that a Bitcoin has. Anyway, I want to touch on that because I hadn't heard that approach about the coin economic structure. Take a look. Is it basically a security, a stock like anything else that can come and go? Or is it a standalone secure blockchain that is set up for persistence?
Well, you're right, Mark. And so it's like, okay, if there wasn't a token, and okay, I think you just have a fancy blockchain based database, which is like probably redundant and not necessary because there's much better database software out there. So again, I don't really see or understand a lot of the technological use cases for these projects to begin with. But like you said, we both said like, they all have tokens. And so I just think there's something nefarious about that because there's a lot of unique things about Bitcoin. And I think this is kind of one of the hardest things for me to get across to, especially new Bitcoiners. Like, there's actually very few decentralized systems out there. Like, the only one I think could maybe scratch the surface to Bitcoin would be the internet, and I think that was probably more when it was initially released. I think it's since been co-opted by various governments around the world or large service providers, and so we've even seen that technology centralized, where Bitcoin, no one country, company, or entity can control it because it's truly decentralized. And Bitcoin was a gift. Satoshi just released it to the world. I wasn't aware of Bitcoin in 2009, but if I was, like, I had the same opportunity to participate as everyone else. And Bitcoin doesn't have a marketing department either. There's nobody, individuals and companies have built use cases in the space that they market, but Bitcoin itself, like the protocol, doesn't have marketing department, and it's TikTok next block. The users of Bitcoin will define its future, and I think that's a heavy responsibility that I talk a lot on that we can get into. But I do want to talk about the communist point a little bit, Bill, because I think it's actually extremely antithetical to Bitcoin. Communists, they worship man, they worship the state, they worship central planners. I think they're evil. They kill a lot of people. They destroy the church. Bitcoin is actually the most true free market in the world because it can't be manipulated and it has a finite supply, and that's actually predictable, and that's what capital allocators and builders want. They want a low time preference, so when they make investment, they're making an informed economic decision, and they're not gambling with their capital like any centralized monetary system.
And
Well,
you
said. I was certainly reluctant to compare any of this to communism. I am in fact very anti-communist. 1984 Olympics, I thought it was kind of BS that Russia refused to come to LA. But yeah, my patriotism and early formative education was incredibly anti-communist. So I'll just leave it at that and say that, I did go and see Ronald Reagan on the campaign trail, which I think was formative. I'm not necessarily aligned with any political movements or anything, but I will say I'm anti-communist, and I did share Reagan's belief that it was in fact evil. And
yeah, and
I
I
like
think
how you use that word.
yeah,
Describe.
I think what Bill and I do is we move very fluidly between the serious aspects about how money, and there are obviously very clear and bad forces at play and tensions in our community that are impacting livelihoods, spiritual side, practical and spiritual sides, visible, invisible aspects. We see it with the young people, hearing them speaking, getting jobs. What we do is we will traverse it using culture, movies, in order to make concepts accessible to people, and we will be light and touch on the fact that why When people look at Bitcoin, there's no way that they don't think we're a cult. And we say, yes, cults start smaller sometimes. It's basically people banding their resources together because they're like, frig, look around. No one really gets what's going on. So we absolutely embrace the distinction of being an outlier. There's no way you can't be. And also, I appreciate your distinction there. And yes, I think Bill knows a few Ronald Reagan quotes as well, as he's adopted them through the years.
He was also basically a comedian. Some of his jokes, if you ever watch, Reagan YouTube videos, like who would do that, right? But yeah, he was very comical, and his speechwriters understood his sense of humor, which I think is pretty awesome.
Yep. He was a communicator for sure.
Great one. Yes, a great communicator.
Well, talking about that, recently we've been focusing on jobs and the young people. Bill and I are doing it for, I won't say for selfish purposes, but we noticed that our podcast has a barbell audience. Older people, say the older 45 and plus, looking to figure out what the hell's going on. If I want to leave my job, how do I get it? How do I create a new one? And then younger people, Bill's, I'm not calling them kids anymore, Bill, as I did last week. People in college, getting out of college, or that 2 years in, where for art now do I go? So employment's huge. They used to call the New Jersey governor the last Caesar because they appointed every single job, either directly or indirectly, in the state, and they were the last state to do so. And when you give someone a job, they never forget. So we're focusing on, we think the job situation is much worse. The data supports that the underemployment or the participation rate is below pre-COVID levels, approaching, except for the dip, the post-COVID levels, and people are dropping out or can't get jobs. And I think when you do that, you really have a problem. You foment this, people will do things they shouldn't be doing. They're going to be going maybe, people talk about radicalization or what have you. So what you're doing in this space is awesome. By not just giving someone who has a small job of the ability to then, build up, tie your boats together and withstand the waves of competition better, but you're also giving a voice to people to tell about their work and have interested parties, either clients or mentors, come along and say, I heard you may want to try this. So that, Wyatt, that's the reason you're here. And I think that's the reason why Bill and I are now, Bill just showed me some numbers we got on our podcast. I'm like, are those fake? Are those bots? You think that? I mean, because we're focusing on how to get people resourced for this next non-Keynesian world.
Yeah, well, it's a great point, and as a younger person, I'm kind of right on the border of millennial and Gen Z. When I try to understand our current moment, it could be challenging. I'm not saying like I have everything figured out. I have like this crystal ball, but I specifically on government data, I think it's all fake. It's unfortunate. I think CPI specifically, obviously very big. In the Bitcoin movement. I think that's a lot. There's a lot of nefarious things they do with like substitutions and whatnot. And so when I'm working with my clients, I use M2 money supply growth as inflation, which is closer to 6% over the last annually over the last 10 years, as opposed to the 2 to 3 it's at right now. And there's a lot of anecdotal examples. There's this viral video on Twitter. This lady like reordered her groceries 5 years later, and it was like was like $80 and it was like $140. It's like, okay, well that's real impactful inflation. And then we just had that huge jobs revision. Again, if I'm being as charitable, which I don't like to be, but collecting jobs data is hard. I don't think they have a perfect system. To begin with, it's just kind of a survey of a bunch of random people, and it's like, yeah, did you hire anybody or not? And so it's not like the greatest form of data collection ever, but I do think there's some value in being consistent with that. But the last year, the Biden administration, they revised jobs down 11 to 12 months, and so I just think that's nefarious. Where they post a headline, get juice the stock market, whatever their actual goals are. Who knows? But
Yeah,
and then
I mean, why? Who knows the goals? But when Bill and I talk, we have to say things like, "Do your own research." Past performance is not an indication of future performance, and it may sound like word dribble, Scrabble, but it's reasonable. It's like someone who's listening may say, "Hey, Mark's old and dirt. He may know something. I should listen to exactly what he said right there." And I'm like, "Wait a minute. I'm fallible. Things can change. We buffer and qualify statements for good reason because I don't know. But given my work and if past is prologue and certain things, this could happen, and I think it's better than this. Like those discussions are great. But when I agree that everyone out there, there's enough evidence about the persistence or utility of some government data that if you're going to use it, be very curious about what they call error bands or fallibility or just framing it. And imagine if they said unemployment was, unemployment rate's 4.3%. And then they look over the shoulder, but you know what happened? About 20% dropped out of the workforce. So this number really doesn't matter. Like that statement's not going to follow the 4.3% unemployment number, but it should.
100%. It's a great point. And yeah, I would like, reliable. It's like, okay, well, how do we, adjust our, systems to, kind of move past that? Because we just have to know it's unreliable. Yeah, I think one of the last interviews, Charlie Kirk did, rest in peace, is that he was on Tucker Carlson. He was talking about the pink collar economy, where a lot of corporate jobs, I personally think, are just, email monkeys, like the professional emailers. And I think this is like a great aspect of AI, which I'm not nearly a AI expert. I know a lot more about Bitcoin than I do AI. I want to be productive and, make my business more efficient. So I try to use it, as much as possible, understanding, there's some caveats with that. But so we've set up, and I think this all gets traced back to the money. If you don't have to be diligent with your capital allocation, you can just do frivolous, not important things like, increase the size of your HR department. So I think that's, specifically led to men falling out of the labor market, which I think is extremely concerning. I think, any prosperous society is built off the backs of men, and that's just like our biological difference. Like we are tenacious, we go out and do things, we're inclined to build. And so when you remove that, then obviously you're going to have a more precarious, economic environment. And so when I'm talking to younger people and we're trying to understand the current moment, it's like, I don't think it's red or blue or left or right. I think it's good and evil, and it always has been. And centralized anything is subject to the will of the centralizers. And why I'm a Bitcoiner is because the money has been centralized and it's controlled by the Federal Reserve. Because the dollar is the world reserve currency. And what you do is, if we think of money as like the base market, and money is a market, and you have an 800-pound gorilla in the room that can put their finger on the scale and manipulate that market, every other market then is also manipulated. I think that's, again, try to call a spade a spade. I think that's evil because you really strip the market participants of their individual agency, and that creates a despair when you deprive them of the right to receive accurate market signals. And when market feedback is distorted, you lose your ability, like I said, to make informed economic decisions. And that leads of our individual and sovereign agency, which is our gift from God. And despair isn't like a momentary lapse of judgment. It snowballs on top of each other. And when you're constantly forced to be gambling instead of making an investment, you have no idea what you're actually doing, or if your hard-earned time and labor and capital are being used on the appropriate thing, because you can't discern what's true or not. And so I think like the kind of the base movement here is like a return to truth. And Bill, and Mark, you were showing those charts early. That's why I think gold and Bitcoin are up. It's like we are seeing kind of this return to truth, this return to real assets. Like people don't want this fake dollar denominated inflated assets anymore. It's just not real.
Yeah, and like where you're coming from is not, I would say, in Bill's my financial world, that what you just said in the last 10 minutes is not table talk at the majority of homes, in Bronxville, New York, or where, maybe New Canaan or Darien, Bill. And it's hard for people to make adjustments. I was just at the Nashville conference where Kahneman Tversky is now, their work in anchoring, et cetera, is coming a little bit more familiar, so people can walk into why they should consider changing behavior and take in different samples of information, because over time we become anchored because something worked. I went to a bank, I got a job, I saved money, I was able to put my kids through college, and that's going to work forever. It's like, well, it may not work for your kid. And little things like, and I like working with Bill because we're so complementary. We have a big overlap in many ways, and then we have different disciplines that we brought to the marketplace. And the one thing I never knew was that money used to be a market good. That statement is like, what do you mean money was a market good? Like, banks had them. There were different monies that people could use based on the quality of, recognizability, portability, durability, all those things. What we just went is right there, Bill, is like, I think half the audience probably said, all right, good night, Gracie, I'm out. Mark's talking about the definition of money. I want to know how to get a job, or where I should where I can double my money in the next 6 months. That's obviously we all want. I think the level of debt, and the Japan is the canary, doing something very different. One of the oldest cultures in the world is doing something very different from the West. And we invite people to consider. Don't demand it. As I said, I've been wrong so many times, I'm surprised people even talk to me anymore. But we invite you to consider that what has been going on in the last 30, 40 years may not be exactly the way forward. Things, there's enough odd things going on here to look around. So that's what I wanted to sort of take what you eloquently said and then sort of translate it into a language that maybe I'm Gen X, I think, Bill, is that right?
I believe that is correct.
The latchkey.
We're definitely not boomers.
Not boomers, unless I'll be a boomer if I can take that stack. Let's go.
Yeah, I want my pension. That must have been the best. Retire at like 55, get your pension,
and get defined benefit, even defined benefit.
Well, I think we could go very off track, especially because some of this reminds me of science fiction movies, and I could go on and on and on about maybe the best one to bring up would be like a Logan's Run, where the machine ends up like running society, and you end up with
everything's beautiful in this world. Logan has 2 wives, and he has 4 jobs, and everything's great, but no one lives past 30. Logan is 29. And then
exactly.
Logan's like, oh shit, there's downsides to this world. It's like, yeah, in dystopian worlds it comes hard and fast, my friend, and it comes for you. Great reference.
Our chat did bring up the concept of laissez-faire, which I believe is appropriately attributed to Voltaire, Hans, and Thomas Jefferson, and some of this goes back to the founding fathers, and I think getting freedom from another definition of money and taxes and all that kind of stuff. But to really pivot this and go off on a potential other tangent, like I have to, first of all, I'll preface it by saying like I do want to add Bitcoin to my retirement portfolio, and I'm actually looking to convert in a 401k, a former 401k, into an IRA, and have that be like an SMA. And I'd love to ask you about that specifically, like what your recommendations, why it would be for people that are looking to do that. But before we continue talking about what's so great about crypto and Bitcoin, like what happens if we have all the computers break down, and they're like I think that there is, caveat emptor is part of what we were getting at earlier with buyer beware with government data and fiat currency and stuff. But what is the real risk, like aside from hacking and stuff like that? Like if electricity goes away, I think I want gold. I don't want to necessarily say this is the true. Well, it would be the doomsday scenario. Who am I kidding? Like if you can no longer access the internet, what are the real risks of any of this kind of thing happening? Or basically you can't access this asset because it only exists in hard drives and computers and the internet.
Yeah, no, it's a good point, Bill, and Bitcoin is a complex system, and so there's a lot of layers to it. These aren't new questions. No disrespect, I would say this is fairly common FUD, and I'm pretty confident in like a Terminator type scenario. Just keep the science fiction movies going. Like Bitcoin will still exist. Like for the Bitcoin network to continue, you need a single internet connection, a single node, and a single Bitcoin miner anywhere around the world, right? And so even if the electricity went off in the entire North America, the United States, or whatever, as long as there's electricity somewhere in the world, like the Bitcoin network will continue to persist. And so I really don't worry about all this stuff. And I think we can get a little too in the weeds where the doomsday scenario, like what if this happens? Like, is that a risk to Bitcoin? It's like, well, it's a risk to a lot of assets. The world you're describing, I don't want gold. I want bullets, and it's like my gold probably isn't worth that much to begin with. Neither are my stocks. My real estate probably isn't worth that much because that's largely dependent on, rule of law and enforced property rights. So I think we can kind of do ourselves a little disservice. Like it's important, to take things to like the edge cases to see how resilient technologies or systems are. But I think, Bitcoin's about as resilient and anti-fragile as, systems come, and this gets back to like its decentralized nature and the fact that there isn't a central entity that controls it. So I think it makes it about as resilient of an asset that you could possibly own.
Yeah.
So resilient to Skynet, and John Connor will be a Bitcoin maxi. And I think you're right. There would be other more valuable assets than gold if the machines are enslaving us.
And pulling it back to a more like a weird science from a Terminator analogy, I think you're going to be what the attractiveness of Bitcoin from a resiliency standpoint is that it's attracting more talent because it is persistent. It's been around for over 15 years. You know that when you're involved in the Bitcoin network, your money's probably a little more sound than if you were on a Solana foundation or working for Oracle, where the money goes to Larry Ellison and his son and less to you. So when people are saying, where do I want to be involved? I think you want to be involved in a community that has growth, that has a younger generation, not an older generation. Think Japan, versus maybe the global South or other places where there's youth and vitality. So yeah, you need energy to drive a hard drive and to make that happen. You also need the people, and the Bitcoin community does have. And I met a bunch at Bitcoin Park this weekend for the Kathy Wood Imagine If conference and their treasury and custody thing that Bitcoin Park put on. So that's it. I mean, and I do, guys. I talk a lot about Bitcoin. I look for 1,000 ways how it wouldn't work, and my wife would, throw me out a window and finally say, "What did you do?" So I'm looking for the holes. I am Cato to my own Peter Sellers. I am constantly trying to come after myself in order to find the weakness in this thing. So, so even though we talk not boastfully, but constructively about the asset, we know that nothing's done and then there's always going to be attack vectors. We just think it's better positioned. I do anyway. Not to put words in your mouth, Wyatt.
No, I think that's beautifully said, Mark.
And yeah, I guess I did introduce another segue before we asked the question, but our chat does have a question that I think directly
is it from
follows.
Hans again?
It is from Hans. Hans is
Yes.
our number
Thank
two.
you for coming back, Hans. We love having you.
Hans is our number 2 fan. This ranking thing is kind of cool. How can I convert and invest in Bitcoin with a 401k or IRA?
All right. So this was not a layup, but it's also a good place before you answer, Wyatt, to introduce our sponsor, Unchained. Unchained does have the ability to take IRAs or spot Bitcoin, cash for Bitcoin. And we suggest unchained.com. Go to our show notes. They've been doing it for years. They are one of the leaders in a way to provide a self-sovereign custody of Bitcoin across many different accounts. They also have a lending product out there for businesses. I should know, my business does it. Anyway, we just spoke to the folks, including Joe Kelly this weekend, the founder. I know a lot of people there. We do suggest it. I use it. So, Hans, that would be my suggestion.
Well, it's a even better segue, Mark, and I'll just preface this where this is not financial advice, educational purposes. Only thoughts and opinions are my own and not that of my firm. I've also partnered with Unchained, and kind of my shtick, in the RIA space is like more or less refuse to buy the ETF. I'll circle back to that in a second with this question, specifically because I want my clients holding bare asset spot Bitcoin because you can. And it's like if you just own the ETF, like I'm not in Bitcoin for the price exposure. It's obviously it's nice, but I'm in Bitcoin to be sovereign individual and in full control of my wealth, to be uncensorable. And so all of our Bitcoin holdings are centered around sound custody solutions. I use Unchained to do that. And I love working with them. They're phenomenal partners, and we can kind of meet people where they're at with how comfortable they are with the asset and technology. Like I can get somebody set up Unchained. Mark, you hold 2 keys. Unchained has 1. I offer like the advisor model where you hold a key, I hold a key, and Unchained holds a key. And then we can also offer multi-institutional, multi-sig. And it's important to understand with self-custody that there is no silver bullet. There's trade-offs to all these custody solutions, and that's why we specifically work with clients to identify that and what they're most comfortable with. But specifically to the 401k IRA question, starting with just a 401k, a lot of times those plans are determined by the employer. So if you're currently employed and you want to participate and get the match, you are probably going to be limited on what you can invest in. Some plans have more options than others, and I would say if you are confined within the context of your 401k, MSTR, different Bitcoin treasury companies can be a way to get synthetic exposure to Bitcoin. The ETF may be available to you, and at that point just like we work with the tools we have. When it comes to the Bitcoin IRA, something I give Unchained massive props for is they've come up with something unique, I would say, in the industry. It's called a tri-party agreement. So with any retirement plan in the United States, you need a qualified custodian. Obviously that kind of flies in the face of holding your own keys in Bitcoin land. And so what Unchained did is they came up with something called a tri-party agreement. So they have a qualified custodian, Fortis Bank, and what Fortis does is they agree to sign the keys back over to their customers, the Unchained customers. And so you still have a qualified custodian and the ability as a Bitcoin holder and customer of Unchained to still hold your own keys and be in control of your wealth. And so you can kind of think of that as like a cold storage vault with like an IRS paper shell. So you do have the ability to move Bitcoin. If you do that before age 59 and a half, you violate the terms of the IRA agreement, and Fortis will report you to the IRS, and then you'll have to pay the penalty and any potential tax associated with doing that, but you still hold your keys, and not your keys, not your coins. And so that's why a large reason why I decided to partner with Unchained is just I think they do things like the right way within the ethos of Bitcoin, and they make it very easy to do if you don't want to participate in your employer plan or you're retired, very easy to roll a 401k over into an IRA at Unchained, and it's a phenomenal innovation in the space.
And how is the tri-party agreement contractually executed?
Yeah, so when you sign up for an IRA at Unchained, you get the documents from Fortis Bank that you have to sign, and they do a great job of making this easy on the end user because a lot of the logistics is handled on the back end, but the end result is that you have a qualified custodian, your IRA is legal and eligible, and you hold your keys.
These aren't like smart contracts or
No,
something like that, right?
no, these are physical. They're e-signed, but like old school
Right.
business contracts.
Okay. Well, yeah, since we don't, since you guys don't like Ethereum, that's probably a good thing situation.
Correct.
So we're at an hour and about 10. We should probably wrap up pretty soon. And yeah, I guess we'll just kind of move into a closing segment here, Wyatt, where first of all, we'd love for you to plug whatever you would like to plug with our audience. Tell them where to find you on social media. Feel free to let loose with whatever you want to talk about.
Thank you guys again. I really appreciate it. But before I do that, just two things I want to touch on. I'll parlay the second into the closing comments. But I kind of brought up stablecoins earlier. I just kind of want to like phrase like the larger crypto landscape. So I think there's Bitcoin, these technology products that are projects that I don't care about, and then there's stablecoins, and I think this is kind of like a new development. I'm not actually that particularly interested in stablecoins. I'm sympathetic to the global south, or people where their local currency is trash and it's easy way for them to preserve some purchasing power, or just use the dollar. That's kind of my, again, charitable cause for stablecoins. But I think we're really seeing this with the Genius Act, is like the proliferation of stablecoins. And one thing I want the audience to understand is that I wish I could craft this analogy a little better, but I haven't been able to. But I kind of use like, the bigger they are, the harder they fall. I kind of parlay that into like the more complex the system, the longer they can keep the lights on. And the US dollar hegemony has been extremely creative at finding ways to create artificial demand for dollars. Post 1971 was directly parlayed into the petrodollar system. So we get Saudi Arabia to price their oil in dollars. We just vow to protect them with our military. And I think we're seeing the next iteration of that with the Genius Act and stablecoins. I don't think that's a particularly novel technology. It's just a way, I think, to get new buyers of treasuries. And so I just think those are kind of like the three emerging kind of veins of crypto, if you will. I don't think stablecoins are a particularly good thing. I'm not that interested in the dollar being prolificated and getting a new life. So just kind of want to set the stage for the cryptocurrency industry at large and how I view it. The second, and this will parlay into my closing comments. So Basilic, we still do some TradFi stuff. A lot of our clients still want exposure to traditional capital markets. I don't have any qualms with that, as long as they understand what they're investing in. But we do predominantly work with Bitcoiners now, and I think you kind of encapsulate everything we've talked about. Is financial planning is kind of my biggest business service. Set my firm up to be a little bit more a la carte, so people can pick and choose what services they want to partake in. But when we do that, and it's like, okay, and this kind of grows out of like Bitcoiners kind of have a disdain for professional services, and I think rightfully so in some cases, but other parts of me wonders why. And a lot of my clients are like, okay, we've stacked sats, like now what? And one of the questions in the chat, I'm not a laissez-faire capitalist. I'm a proud Catholic, and Pope Leo XIII wrote an encyclical on labor and capital. And I think I think unfettered capitalism is bad, and we need to hold society to a certain standard, and which we're not willing to do evil things just for the sake of making a buck. I try to integrate that into my practice, where we've talked a lot of the uncertainty of the future. I like macroeconomics. I think we need to be careful in complex system. There's a lot of data points, and it's easy to pull out, the variables you want to see and draw your own dots and, come up with your own conclusions, and you might, miss a big part of the story. And so I'm a big believer, just high level, in like the four turning thesis, the 250 year sovereign debt thesis that Ray Dalio made famous. And so if we overlay that with the future, it's like there could be a lot of uncertainty, but there's also a lot of opportunity. And I think kind of specifically, we were talking to about young people. It's like I found a lot of comfortability looking to the past, and I'm a proud Catholic, and we have a long tradition. It's called the noblesse oblige, which means nobility obligates. And if you look at the old wealthy families of aristocratic Europe, not only did they have wealth, but they were guided by a strong moral worldview, and they made intentional investments into their community, and they understood the gravitas of the responsibility they had as a wealthy person or family in their community. And I just parlay that directly into Bitcoin. Is how I think I add the most value to my clients at Basilic. Is I think Bitcoiners are going to be the 1% of political and economic power. And while that's exciting and it's exciting to embrace a new technology moving into the future, it's like I think it's also comforting knowing we don't have to recreate the wheel. It's like we have a long history of being good stewards of our wealth, and I think particularly when I do some forecasting with Bitcoin, the number ends up being larger than what people may have initially thought of. So we identify not only the appropriate legal and financial structures to preserve that Bitcoin, but we also help them understand the responsibility they have to make sure that Bitcoin gets to the next generation and understand we're the first generation of Bitcoiners, and it's like they will look to us how we stewarded our wealth. And so I just think that's very important and something that makes me very proud of the work we do.
You got it, and you got the space to prove it.
That's right. And, if you're interested in working with me professionally, you book a free consultation at basilic.io. You can find my personal writings at wyattorourke.com. Communization of Finance is available on brains.com. I'm active on Twitter at wyattorourke_. And then also, if you're a financial professional or interested in learning more about the intersection of Bitcoin and finance, I'm hosting the Bitcoin Financial Services Summit at the Space. That will be, a hyper, focused, high signal event to help educate, people on the advancements of Bitcoin financial services. And Mark's going to be coming. I'm super pumped about that. I think it's going to be a phenomenal event. And tickets can be purchased on the Space website at denver.space.
Thank you, Wyatt.
Thank you, Wyatt.
Thank you.
We'll capture all of that in the show notes. And yeah, this was very interesting. And anytime we go, over an hour and 15 without even realizing it, it's a good, lively conversation. So thanks for joining.
The pleasure is all mine. I love what you guys are doing.
You bet, Wyatt. See you out there in the space soon enough.
Absolutely. Can't wait.
Take care, guys.